All right, Avan, thanks a lot for that. Well, let's take forward this conversation on cap goods, the FY22 outlook, the export potential as well for the sector. We have with us Amit Mahawar, Associate Director for Institutional Equities with Edelweiss. Amit, thanks so much for joining us today on the show. So to start with, Amit, let's talk about the future outlook, because this is a point in time where governments around the world are spending money to get that GDP growth that is so necessary at this juncture, given the fact that we're just coming out of a crisis. With all of this government inflow coming in, especially towards sectors like infra, construction, how do you see cap goods shaping up as a sector in FY22?
Hi, thank you. I think in terms of industrials, what we see right now is the domestic market is largely seeing renewable traction in consumable segments and short cycle segments, which is well reflected in commentaries, the Thermax or Siemens in the recent days. What's happening is food and beverages, chemicals, pharma, cement, metals, etc. We are seeing a lot of brownfield debottlenecking spending happening there. Nobody is committing large-scale greenfield expansion. Right, so that's what is driving some momentum in terms of short cycle orders or base orders for companies in this space. As far as exports is concerned, broadly on the demand side it is okay, but I think generally the sector has been facing what some of the sectors like auto have been facing with the supply side issues, which is the semiconductor or chip shortage issues, etc., which is disrupting some supply. And we saw that in Cummins, we saw that in Honeywell, we saw that in Siemens as well. That's what is more about demand supply dynamics right now.
Right. So, when you would say that, one would look at these companies, they would say that, oh my God, L&T is now at 1600, Siemens is now at 2100, ABB is probably at an all-time high. How would you, tell about the cycle of these companies? When cyclical stocks move, what happens? What sort of returns can you expect from them?
As far as valuation is concerned, one has to see relative, what is the incremental growth from the next 2-3 years perspective. EPC certainly to us looks like value plays. Like in L&T's case, we clearly believe that the next 2-3 years, certain demand from infra side is going to be very strong. Today we have COVID-led restrictions and challenges which are impacting even on-ground execution, even despite healthy liquidity on project sites. Right, we have labor mobilization issues which one has to take into stride. So as far as EPC is concerned, we clearly prefer L&T. We think even valuations they are not expensive at around 15 to 16 times on forward core earnings. As far as MNCs are concerned, right, whether it's Siemens, ABB, Honeywell, Cummins, largely they generally have had strong premium vis-a-vis benchmark or even the general EPC players significantly because of a lot of aspects like technology intensity, strong entry barriers, changing business dynamics, and strong growth in domestic markets and export potential. So largely, I would believe, in terms of if you look at Siemens or ABB, the valuations have been always at higher range vis-a-vis general EPC. But then we have extra cash that we have, the returns are still healthy, and the business models are changing, right? In the recent thematic automation node, we highlighted about how the domestic market is shaping up more from greenfield heavy capex intensive going to now more recurring spending by corporates, whether to debottleneck their capacity or to increase the intensity of automation, right? So most of the companies you see are actually seeing a much better cash translation, a far better incremental profitability. And, 2 years down the line, when they report a revenue reversal, normalization, that will come at a lower cost. So that will also drive better profitability in returns for these companies. And that's also what a lot of what is reflecting in the valuations for these entities. We particularly prefer ABB here, apart from Honeywell and Siemens.
Okay, well, Amit, we leave it at that. Thanks so much for joining us today on the show and, giving us a gist of what exactly can we expect from this sector going forward. This is, I think, gaining a lot of interest as well, especially after Siemens has delivered, a commentary that does indicate optimism towards an increased pickup and demand across segments. So that stock is rallying and, it's something, I guess, that's prompted everyone to look at the cap goods sector in a big way too. All right, well, moving on, let's, shift our focus to the OPEC coalition. The members met yesterday and largely they've agreed to continue with the plan that was decided upon in the beginning of April. So over, May, June, July, remember that they had decided that they will